All right, Mark here, and welcome to another Greenbridge Investing Market Analysis. This is a live stream, and today I'm going to be covering Bitcoin, the major markets, and a couple of particular stocks on our radar. If you have any questions, please feel free to ask them as I go through this. And I'm trying to keep this at around 15 to 20 minutes. We have our podcast today at 4:05 p.m. Eastern Time, so I have to prepare for that as well. Okay, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. All right, now, today, as you know, is Monday. It's the beginning of the week. And you know what I have to come out with on Mondays, right? This. So let's take a look at this real quick and see what's going on. Make sure that we are fully aware of all the economic events that are scheduled for the week. All right, so let's begin here with the top of the list. And I'm just looking through this very quickly. So tomorrow we have Consumer Price Index. You know, I don't know if that's really going to have an effect right now, unless there's a surprise. I wouldn't worry too much about that. We have on also tomorrow evening, Eastern Time, we have New Zealand rate statement, right? The monetary policy statement. That's basically like their FOMC. So that can affect pairs like New Zealand dollar, New Zealand against dollar, Aussie dollar. We're not in any of those pairs right now, but it's good to know because if there was a trade setup, then we'd probably think twice about taking it, or we would have to go in with a much smaller position because of the elevated risk. All right, now let's see what we have here. On Wednesday, we have for the pound, we have their GDP. That can affect things, especially since we're interested in the pound. We've been watching; it's weak right now, but we don't have any trades in it. It's good to know that that's what's coming out on Wednesday. It can turn things around real quick for that pair. We also have New Zealand budget release. Okay, that's not important. Unemployment changes. Well, because Australia, the unemployment situation all over the world, that's obviously a concern. So again, important for the Aussie pairs. We don't have anything in that, but it's good to be aware of. And going into the close of the week, I don't really see anything that important here. I mean, German GDP, maybe for the euro, but I wouldn't worry too much about that. We have retail sales in the U.S., the Michigan consumer sentiment. This used to be a little bit more of a big deal. I don't know if it will be now. Again, I don't see any FOMC. I don't see any NFP. So there's no major news items this week, okay, as far as most of the U.S. is concerned, which is fine for our stock trade ideas and, our CFDs and Forex, obviously, just a couple of those like Australia, New Zealand. Those are the ones that we have to be more cognizant of. Okay, so with that out of the way, let's take a look at Bitcoin. By the way, feel free to ask questions along the way here, and I'll answer as many as I can. If not, I will follow up in the chat room. Hey, Joy, how are you? All right, so let's start with Bitcoin. Now, Bitcoin had this pullback, which basically occurred on Saturday. And I wrote about this in my article yesterday on TradingView. And I said, this is going to bring out a lot of bears. You're going to hear a lot of bearish chatter, a lot of nonsense because they watch their 1 hour time frames. And on the bigger picture, which carries more weight, which is what we're looking at here, a daily chart, this is still in a bullish trend. This structure that we have off of this resistance zone, this 95.64 to 10.168, which I've been talking about this for months and months and months, this pullback that we have is just a pullback. This is not a trend reversal. I don't see a double top. I don't see, anything like that. I don't see a failed high. Okay, so all we have is a pullback off of resistance. Now, we're fooling around this support level here, the 8,500 level. It was looking a little stronger earlier, but gave it back. Okay, no problem. What we're looking for here is stability. Now, here's the key inflection point, and what I've been pointing out in my articles and everything else. I've been putting it in the chat room as well. 76.95. That's the key. That is the key support for this structure that has been unfolding since that 3,800 low, all right, whatever that low is there. So as long as this level stays intact, meaning price does not close below the level, then this bullish structure is still in play, right? We have a series of higher lows. the higher high at 10,200 or whatever that is. And now what we need to see off of this pullback is some sort of bullish reversal pattern. That can come in the form of a pin bar. That could come in the form of a failed low, like a little double bottom situation. That can come in the form of an inside bar after a few candles. The thing is, you don't want to get caught in this too early, which is a very common mistake. People just buy into any pullback. The momentum is bearish, but the trend is not. Trend and momentum are two separate variables that must not be confused together. You can have bearish momentum in a bullish trend. So again, I want to see some sort of stability develop above 76.95. We see something like that, we are looking to share another swing trade long idea, as long as the setup appears and we have attractive reward risk. So we're still waiting on that, but that's the plan. Okay, let me move on to the Nasdaq. Again, feel free to ask questions as I go through this. And if I have some extra time, we can go over some stocks if you'd like to go over a couple of stocks that you want to see. All right, now look at this Nasdaq. What have I been saying in the chat room and in my articles too? No opinions. You cannot have opinions. I was talking to some people yesterday and they were saying to me, oh, the stock market's supposed to be bearish and blah, blah, blah. And I don't understand. You're watching too much news is my answer to them. Okay. Don't pay attention to that stuff. Price action knows all. So price is a discounting mechanism and market strong, it's strong. Don't get in its way. Don't let your opinions get in the way. So people are like, oh, should I be buying? Well, you don't want to be buying now. Where were you at these higher lows? Okay. So at this point, if you're in stocks, you just let it run. You let it run. At some point, will it find a turning point? Of course. Markets can't just keep going in a straight line. We know that. But when it pulls back, all right, it's very possible that it holds above this level right here, which is this 8,600 level, 8,550 area. That's the most recent higher low. And if the market stays above that and produces another higher low, it's probably going to at least attempt to push to the higher high or even break out higher, which doesn't really surprise me in this highly stimulus environment, this high stimulus environment where the U.S. government is trying to do everything they can and printing money all over the place. This doesn't surprise me that much. Now, as far as ideal inflection points, so again, if we could get a pullback somewhere above that level, that 8,650 area or whatever, 8,500, that would be an opportunity to maybe put on some more stocks. Right now, what we're doing with the stocks is we are rotating. So we're taking profit on the ones that we took earlier, the ones that we bought earlier, and we're rotating those profits into new buy signals when they appear. But we know that at some point the market would turn, but there's no signal. The ideal spot to really start buying more stocks would be the 8,000 level. That actually is going to be adjusted a little higher, but that's the area, that's the pullback we're looking for to really start, shopping for good quality stocks at a nice, attractive market location. So we're not there, all right? At some point, we'll test that a support in those areas, and that's where we're interested. You should not be buying lots of stuff up here. We are continuing to take small bites, like I said, in particular stocks as they're breaking out, and we're trying to capitalize on the strength while it's still here. Okay, so that's that. We have no opinions. The market will go as far as it wants to go. And until I see a sell signal, we will just keep doing what we're doing and rotating in and out of our long stocks. Now, that's the Nasdaq 100, the S&P and the Dow and the Russell will likely follow that because they follow each other. Now, let's take a look at the DAX real quick. Now, the DAX had this weak close. Now, the stock market, and keep in mind, the stock market overnight looked weak. In fact, when I sent out my trade into the chat room, when I sent my chart in the chat room earlier today, it looked like a bearish pin bar. But what I said in the chat room, I said, this doesn't mean anything until we see how it closes. Now, the DAX obviously was copying that, or the DAX was reacting to that information earlier, and it closed that way. All right, fine. But most likely, if the stock market closes strong today, you're going to see a green candle here tomorrow. So just like with the Nasdaq, you can't have any opinions here. You just have to take your profits while you can. We had a question in our chat room from one of our members who said, hey, one of the stocks is doing great. Shouldn't we take a little off the table? And my answer to him was, hey, it's never a bad idea to take something off the table. You're never going to sell the bottom. You're never going to sell the top. You're never going to buy the bottom. So taking profits along the way and reducing risk is never a bad idea. So that's the same for these European denominated assets. As this thing just continues to follow the US stock market, if you have stuff here, hey, take a little off the table, reduce your risk. If you get a particular company breaking out, perhaps you could take a small bite. Maybe you trade the DAX CFD. You want to take a little piece of that for a swing trade? Okay, fine. But just keep in mind, when the US stock market turns, this is going with it. And at this point, it's acting relatively weak, okay? Which means it'll probably sell off faster. All right, so that's the DAX. Let's take a look now at oil. Oil has been on our radar for it's been tricky because of all the, confusion with the prices and everything else. By the way, again, if you have questions, please ask me while I'm going through this. Here's oil. Now, there's been confusion with these oil charts. All these brokers have different prices, which I think is, not very bright of them, but obviously they have their reasons. This is the Owanda chart, and I like the chart. It's very stable, and the prices make sense. But if you're looking at something like Forex.com or MyFX Choice, which is the broker we use for our CFDs, you're going to see different charts. The key, again, like I said in my previous video, is the structure of the chart. So the structures should look the same. At this point, we almost had a buy signal, but this is not looking like a good close right now. We really need to break out above this $20 level to really be confident with this thing. So a pullback is welcome. Again, if we could get a pullback into the 15 or 16 area and a reversal there, we will be very compelled to take an oil swing trade long. Again, we will send out the trade idea when we have our setup and we have our confirmation. We don't just jump in because, we like something. It's got to fit the rules. That's why we have rules. So, but that's the plan. That's what's on the radar. If we can pull back to something like that, then we're looking for the long. That would be a nice higher low and a potential trend reversal or momentum reversal, I should say, for oil. The trend reversal level is actually at 32. We need to take out 32, and it's got a long way to go. So there's still a lot of potential for a swing trade long in that market. So keep that on your radar for those of you that trade CFDs. All right, let's now jump over to, I want to talk about really quick the Canadian. Dollar Canadian, we are considering a swing trade long for this. I mean, this pair is a pain. That's a nice way of putting it. This pair kind of, it's kind of all over the place, does its own thing at times. And, oh, hey, no problem, Joy. I'm glad you're here, and I'm glad you're getting something out of this. So this obviously is a broad higher low. You could see it here. I mean, look at this nice double bottom off of this level here. What was that, 38.58? So basically 38.50 area, right? That's a nice double bottom. This entire structure dating back to, earlier in March there is a higher low, right? You break out of this consolidation, which is 4160, 4167, around there. This thing has a lot of room to run. And right now we're fooling around at 40.27. So again, this is a nice outside bar. We are likely to call this as a swing trade long, probably this evening. So watch this. For those of you that trade Forex, watch your mobile phone, your smartphone for the text message. Look out for the email. Again, it's not official until we send out the specifics, the buy, stop, the stop loss, the targets, and the reward risk. But this is definitely on the radar for a swing trade long. All right, which is the inverse, by the way, of the euro dollar. We had a swing trade in the euro dollar. We closed it early today for a small loss because the signal turned. It turned the wrong way. All right, when we see that and it's very clear, we get out. We don't take the full stop. All right, anyway, so that's the Canadian, dollar Canadian on the radar. Now, a couple of stocks. We're going to talk about these on our podcast today. First one I want to talk about is MTLS, very quick. Andrew's been like all over this one. I believe this is the one he likes. we're looking at some less expensive stocks. We have a nice higher low off of this 18.5 area, and this thing's got some room. You have this nice V bottom, right? This thing breaks out of this range here. Look at this. I mean, look at this old resistance, and it's fooling around there right now. We're at 20.5. Sure, Ricky, no problem. All right, so I'm just going to run through these two stocks, and then I'm going to get to gold. So this thing is a nice candidate. It's got some room to run, MTLS. So we're going to keep an eye on that. There's another one here that's on the radar too, ILMN. Now this one is another one, same type of situation. V bottom. We got this consolidation going on, which is very clear to see on the chart. Okay, I don't even have to draw stuff on this chart for you to see this. You have its nice rectangular, right? Look at this. This is an expensive stock, but around this 305 range low, and then you have this, what, 323 range high, and you have this nice reversal candle that's taking place right now. This thing breaks out. I mean, you know, 330s is a given. That's at least a test. Okay, that's a reasonable test. If it breaks from there, you know, this thing has a lot more. Look at this room it has to run, like 380s. It's got that gap to close. It still has that gap to close that dates back to like June. So a lot of potential there. Again, these consolidation patterns, which is very similar to what's going on in gold, these are typically trend continuation patterns. And this trend right now is bullish, okay? It's following the market, obviously. So we're going to be talking about this on the show as well. We have a bunch of cheaper stocks too that we're going to cover. But I just wanted to throw these in here so you have an idea of what we're looking at in terms of stocks. Okay. Now, let me, so we had a request for gold here. Let me take a look at gold. Now, like I just said, gold is in this consolidation and it's been all over the place. Okay. What a pain gold. 1 minute gold is at like 17.15 and then you look at it and it's at like 16.80 and you're like, what's going on here? So again, you can't get shaken out by this noise. If I draw some lines on this, right? Look at this. We have this, okay? And we have this. What does that look like to you? That's a triangle, right? A symmetrical triangle. Just like that ILMN chart that I just showed you. Very similar to that. That type of pattern is a trend continuation pattern, these type of consolidations. All right, gold is clearly not in a bearish trend. I mean, look at this, higher lows, nothing but higher lows and higher highs. On top of that, you know, we do have a fundamental situation where, you know, with all the stimulus and all the other stuff that's going on, gold is poised to benefit from a stimulus environment, like an easy money environment, they call that. So here's the thing, and I shared this in the chat room as well. To take advantage of something like this, you don't want to get caught at the upper part of the range. If you do, you're probably going to have to take some pain because we have a position in this, and the stop is at like 1650. Okay, so the best way to take advantage of something like this, if you're not in it, is to place a limit order somewhere near the low of the range. Okay, like 1670s, 1680s. You'll pick it up at a better price, but here's the risk that you take. If the momentum continues and it breaks out of the lower part of the range, that's your risk. You're going to get stopped out, right? If you're using that range low stop around that 1650 area. So stepping in front of bearish momentum is a risky thing to do, but keep in mind this momentum should be limited in the face of the fact that we're in the range and we're in a very bullish trend and fundamentals are supporting this thing. So that's where gold is. I'm very bullish on gold. I'm just, you know, I'd like to buy into this pullback if we can get something around, you know, those 1670s, 1680s. You know, I'm not opposed to putting a limit order and just getting filled and hoping for the best. Of course, you have to have a stop for something like this, because if there is a more dramatic pullback, which anything can happen, then, you know, you don't want to get caught in something like that. If this thing breaks out and takes out 1740, that 1740, 1750 high, it's on its way. Okay, and I wouldn't be surprised to see the 1800s or higher in a relatively short period of time after that breakout. You just have to be patient with these consolidations. All right, so that's pretty much where I am with gold. Now, do I have any other questions? Because I have to wrap this up. I've been talking for a long time. I tend to talk a lot, and you have to stop me when I talk too much. So if you have any questions, any other symbol you'd like to see real quick? If not, we have our podcast at 4:05 p.m. Eastern Time. I share the link in the chat room. Also, you just go to our channel back here. If you subscribe to our channel, you'll get an email notification from YouTube with the link to the podcast, and you can watch us today. We have a bunch of interesting stocks to talk about. All right. So again, thank you for watching. Thanks for participating. I will see you in the chat room and in the podcast. Have a great day, everyone. Take care. Bye.